All right, what's going on, guys? So this is going to be a weekly scan for the week of FOMC. We have FOMC on Wednesday, so I expect the early week to be a little bit slow, and hopefully just continuing to cut off some of those swings leading into FOMC, and then be a little bit more risk off with my positioning leading into FOMC. I don't want to have a lot of positions on the table for this one. I have a lot of commons positions. I've been talking about my first favorite commons trade, and if you're not filled on this one, I don't know how the fills are going to be up on this, all the way up into this range. But first would be BE. Just a really nice weekly chart. I've already covered this one in previous scans, so yeah, really nice chart with externals all the way up above $30, and then a high tight flag on that weekly chart with a lower low accumulation that was building ever since this 1150 was taken, and then we got a huge amount of volume on this continuation that broke a lot of the structure from lower high perspective, right? I talk about this a lot whenever you have lower lows being bid and lower highs obviously pressing it lower. Once the tension releases with a break through those lower highs and then you get proper digestion above those lower highs, it could turn into a big change of hands on the names. So I really like BE for a really nice move, probably all the way up into, I would say, 30. We have earnings on the way, but I think this one doesn't really have any true signs of stopping just yet. I'm up like 24% on my commons, so that's a really nice trade over there. Pretty nice ATR behind that as well. We're getting the industrials rotations very, very clearly here in the market as well. If you guys go take a look at like XLI, I talked about how that was a really nice weekly candle being put in there. We go over into some of these other names within the sector, and we had some really nice moves, right? MMM was one of those. A really nice accumulation that was building ever since we lost this level right here on the daily chart, and then they started to obviously bid those new lows being made, and then that led to a really nice move higher. RTX, really nice continuation, and basically all of these have been seeing really good continuations aside from BA, and that's why I was on BA last week. I don't really know where this thing is going to go now. It obviously had the pre-release of earnings, which scared me off a little bit, but not anything too bad there because it popped back up and got relief. Now we'll go to LLY. LLY, in my opinion, could be a really nice trade opportunity. I feel like they've been accumulating ever since the gap fill here, and then they basically took out this previous weekly low, higher low, and now we're getting higher lows ever since they took out that weekly higher low, with like buyers obviously stepping up with a recovery candle here. This is a weekly inside bar on lower volume. However, if you go into your daily chart, you could see how there was a little bit of a wick on that, and if you guys go to the hourly, you can see how the sellers were kind of stalling as we put in a lot of volume towards that low, right? This was basically your low a day with a lot of volume behind that low a day. And then what it did was it kind of just defended that low a day and then found some nice recovery back to the upside. So if we could control this gap, meaning that buyers step up a little bit and you have a little bit of confluence with this gap sitting here as well. If you pull up your EMAs, it's basically reclaiming those EMAs today. Basically, it would just look like some sort of higher low into a run up higher into the report. I'll probably add this one to the focus. However, that's not anything that's like too much on my mind right now. I just talked about the XL V sector in total, the healthcare sector overall, right? We're getting a really nice monthly retest followed by recovery back up above the 141.71 monthly level, and that was a huge amount of resistance that was built before we obviously got the continuation above that. So if we could continue to get that, that could obviously be a really nice opportunity in some of those names. J&J was one that Rick was just telling me about. I want to see this one properly digest, basically above. If you go to the hourly chart, we had a hourly support followed by a recorrection all the way lower that led to a hourly spring, in my opinion, uh, which was a run up into the report. It marked down and then it caught onto that previous hourly floor, which is structure developing for the buy side ever since the spring. We have gaps to fill all the way up into about 150 and all the way up into 152.31. We're getting really nice high tight consolidation on the hourly chart. So that's a really nice one. I'll probably add one that onto that one as a side watch into the new week. Baidu in China is one that I really like. We just had the BOJ decision, and that led to a really nice move within Baidu. I talked about how commons here, if we revert to the mean, this could be a really nice opportunity for the upside, and I think there's a lot of asymmetric risk involved in the China names as of right now. This is going to be one of my top commons trades for this year. We go over into some of these other charts, and they all have been seeing really nice pops. Obviously, some of them have some earnings on the way. PDD is another one of these ones where we have a big time gap, right? This is a huge gap on our weekly chart and our daily chart from that one earnings report, which was a major markdown, right? And we filled the gap, we trickled back down to the bottom. We obviously failed to hold the bottom as we got the slippage beneath, and then ever since that, we left behind some bear gaps to fill to the upside, right? So we have a bear gap that's sitting right here technically that remains unfilled. I feel as if this could be a really nice trade opportunity for this week, but it's a much higher time frame read in my opinion, with it all basically being who can control this gap. Um, we got a really nice move in most of China. Baidu's one of my favorites just because of the structure behind that. We obviously had a huge daily support here at 79.68, followed by an undercut of that, right? And then we got back above, and that was right into the BOJ announcing their interest rate stuff going on, and now we have a potential reversion back all the way up into some of these gaps, which is 99 and 93. Two unfilled gaps to the upside. So that could be another opportunity that's really good for some option swings. Probably a little bit further dated, but China gets a little gappy, so you got to buy a little bit of time with those ones. But yeah, I really like the Baidu chart. I think this chart's absolutely insane. And on a much larger perspective, where we could start really getting buyers committing to that move and defending that move that they made yesterday, then this can obviously see way higher, right? I mean, we have a resistance all the way up into the low 100s at 115. And essentially all we really need to do here on the weekly chart now is break structures. So we need to take out the previous lower highs and then bid on top of those with weekly closes, obviously exceeding above those levels. Pull back and hold those previous lower highs is now higher lows, and that would be a strong sign of a change of hands happening here. Obviously, we could fill the gap, pull back a little bit, find another discounted entry on a higher low, and that could be a nice opportunity as well. So, I said BA. Baidu is a really nice one in my opinion. Disney, obviously, it's really nice. Not really much to talk about here with Disney other than this being just a high tight flag. We have a 126 external high. And then what happened was we started formulating this really big weekly base. We filled the gap successfully. That was the Q2 earnings gap. That was a huge markdown, right? And then what we did was we just basically put in a higher low on that progress being claimed from buyers here at 107.25. If you go to the weekly schematic of this, guys, I think that the spring actually happened right down here as this ever so slightly swept the low from the COVID low, right? And then that led to a really nice relief trade here for the time being throughout last year. Leading into 2024, and then we got a recorrection lower. That recorrection lower was actually right into a fill of a lot of these gaps, like this one right here. This is a earnings gap that was remained unfilled. We filled it, and then we started pushing on top of that gap, claiming that gap and holding that gap as a support. And then obviously it led to a really nice move back to the upside. So now we're basically just consolidating off of this range with the proper digestion that is needed for a plus 6% move on the underlying here. It got a premature campaign, meaning that we never got any sort of super strong weekly high or low or daily high or low that dug into the gap. It just trickled its way to the upside to fill the gap. Now we're getting lowering sell side volume patterns that are pushing us down into the bottom of the bull gap as we speak throughout the end of January, right? So the weekly candle is really, really nice, and I would expect to see some momentum pick up and continuation starting to pick up off of that earnings candle. So um, we'll see what happens with this one. I have a decent amount of time here, and I think we could obviously make new highs, or else the risk reward wouldn't really be there. So that's Disney. We'll go into MO, or McDonald's. I already talked about this one, but we had a low. We had a daily level as well, with two lows being put in right here above this bull gap. We filled the bull gap, made a low beneath this low, which was an attempt of a spring beneath this daily support that was trying to be made after we had that announcement of the E. coli breakout that led to a huge markdown in the name. And then that built up a lot of liquidity from the upside off of 303.81, which is relative daily equal highs. And then that obviously was a failure to break and base above that level to then go fill the gap, right? And then we just pulled our way lower on lowering volume into the fill of the gap, right? So if this one can obviously hold above this daily level here, that's off of like 283.71, 284-ish, 285-ish. That could be a really nice opportunity. It's also where the daily EMAs are sitting as well. So that could be a nice trade for the upside. I have some size here all the way back up to 290, 291-ish, and then eventually 295 and maybe 300. So I like that one. We'll go over into NVIDIA now and NVDS. I've been talking about how this could be a distribution. However, I don't think the indexes have gotten their UTAD yet. With the character of a UTAD, you need to have several legs, including the preliminary distributions. So just your first attempt of a sell, right? But then you need to see a lot of stalling progress as you make those new highs. And we did see that in the NVIDIA chart. If we go to the NVIDIA daily, we could see how we had a high and then we broke above that high leading into the report. And then what it did was it swept the liquidity off of this 3, 4, 5, 6. Is that 5 days of basing happening there? And then we put a daily wick on top of that. They tried to hold the June high, and then sellers obviously just took control. If you go in a smaller time frame price action on this daily candle right here, I talk about dissecting price action a lot. It was a lot of capitulation followed by a little bit of recovery, that recovery being on lower volume, and then a lower high being spotted, right? And then what happened was we built out a big time head and shoulders on the daily. And I feel like a lot of people were front running the fact that the distribution can continue as we filled into this unfilled gap that's really hidden here on the daily chart, as well as a huge daily level at 130 of a previous internal resistance, right? So this is just structure building out that is trying to hold higher lows, and then they're trying to sell the higher highs. We had a higher low, higher low, higher low, and higher low. But with the amount of liquidity that has been being built off of this support, we can now essentially say that if this wants to continuously distribute off of the upper ranges, which we have seen, there would be a path of least resistance for the downside where this support would essentially start failing to hold. What I want to see with NVIDIA is something built out in terms of like this being defended through the Jensen imbalance candle, right? This is whenever Jensen was speaking the day before as NVIDIA was trying to make that new high, and then it made a new high right into that session. What happened into that was they started to liquidate everything that they have accumulated from the lows. And now they're obviously reappearing on this candle here, January 24th, which was yesterday. That's why I shorted this one yesterday. Nice little win there, but I don't have any time here. I don't have any big position built for a much higher time frame read because I think there's one of two schematics that can play out. if we want to have a continued distribution, it kind of ties in with my index read. If we go to QQQ, we have an event that's very important in the market, and we never had a UTAD, right? If you had the drawings on this and you just take a look at candle structure, volume, and price, what we basically had here, guys, was a major election gap, right? And then we got a 1, 2, 3, and then 4 buyers stepping in off of that election gap until they filled it. Once they filled it, we know as if, bull gaps are typically known to be supports and bear gaps are typically known to be resistances, just because there's not enough liquidity within those after hours moves to be able to fill all of big money. So whenever they don't have enough demand and inventory on their hands as we make new highs, we have to pull back into those imbalanced areas on the chart, like this gap here. And that's exactly what we did. And then once we filled that, we started to get this really easy move back to the upside. And the fact that it was really easy with no sellers really involved, however, sellers being very involved in the market throughout December, leads me to believe that, there is something that's happening that's quietly building up here as we lead into an event that's very, very, very big for the market, right? None of this was a UTAD, because with a UTAD, what I like to see is a lot of buyers stepping in at some certain point, like on some sort of breakout, right? And then you just see a really disgusting candle from the highs that takes out a lot of, it liquidates a lot of breakout buyers. And then what it does is it pulls back and then it starts holding the upper extreme resistance that was prior to the breakout, right? Which is kind of how you get your head and shoulders model. It doesn't have to be a perfect head and shoulders, but we basically just need to see this one maybe break its way back to the upside into FOMC, and then we get a really ugly FOMC candle, and then we know that this is distribution for a few more weeks minimum. Obviously, that's going to tie in with March OPEX, I believe, and I think we could get a really strong directional read on the overall market from an index level area to be able to understand that this could see a recorrection all the way back down into the left behind gaps that have been made ever since we filled the gap and then we had to squeeze out, right? I don't think this action right here throughout ever since the election gap being filled is healthy at all. And I think that they've been in an active distribution, right? So I don't think they have the inventory on their hands to be able to lead to a blow off top. That's why I think we're going to pull back a little bit into some of these gaps. Could it happen? Maybe it doesn't, right? And then we leave behind those gaps for quite some time. And once we leave behind those gaps, it will be a distribution later on in the market that leads to a recorrection into those gaps. So we don't necessarily know, and that's why I wanted to just really just leave it up to FOMC. With some of these other tech charts, we have Apple. So with Apple, sometimes certain names in certain sectors will tell you what's going to happen with the market. Just as if, we had a big time rotation happening within Tesla throughout most of the year, and then it was basically catalyzed after we had the election with Trump winning and Elon playing a major role within that, within Trump winning, right? And that was actually a markup leading into the election. We had a huge markup, 204 million volume, 21% markup, and then a high tight flag that swept the earnings candle low, and then it just caught the momentum right into that election, right? That was just the market pricing in what they thought was going to happen, right? They were in the accumulation ever since all the way over here throughout summer, and they got another markup and a big reaccumulation here on the weekly chart with higher lows, and that being our LPS right into the election, right? And we could also see those rotations happening right now in this particular window with some of your defensive sectors. And there's a reason as to why some of these defensive sectors are moving. Could it just be more on a quarterly basis or just a multi-week basis? It totally could. However, we can't deny the fact that the market is trying to transition a little bit more risk off, right? We're obviously getting some of the other names popping as well, like growth. We obviously had some nice continuation candles here within like Roku and some of your other growth names. UPST was one that I was watching for a little bit of time. We have a really nice inside bar, in my opinion, to trade with here, leading into the new week on smaller expirations, right? But these are all just kind of aligning in terms of we have the energy bid, we have a lot of the tech distribution trying to take place. We've already had some tech already in a distribution, meaning Apple. And then we also go into the less liquid names. The liquid leaders sometimes don't really show their hand before some of the other names, and the reasoning as to why that is because there's an amount of liquidity within tech and within those highly liquid sectors to be able to liquidate at any moment you really want to liquidate at. If you go over into TOL or you go over into some of your home builders, XHB, this is a break of structure retest that's actually happening into FOMC. And they have to unload these names before they unload tech because of the liquidity purposes, just because of how how much availability you have in terms of counterparty liquidity to be able to obviously front run a distribution from a broader market perspective, right? These names are a lot less liquid. We go to XHB. This is another really big one where we had these higher lows on the weekly chart, and then we're turning those higher lows potentially into lower highs now. We have a lot of volume from the lows, so I'm not going to hold too much of a bias into this one, obviously being a much larger perspective change of hands, but the chart really doesn't look too good as of right now. TOL, like I said, that's another big indicator. Very less, very low amounts of liquidity within a name like this, and now we're basically just retesting this daily level that's sitting here. And that's also a daily bear gap fill. So if we could obviously get some slippage beneath that, that could also be a little bit of a sign that shows what's going on in the market. Those are just two of those names that I really like for a nice gauge, right? And we go over to XLF. That was another one that we actually had where I knew a distribution was taking place because XLF had major extensions left behind, and then it got this like continuation that was huge extensions from the mean, right? I call it ATR extensions. You basically just measure for how many days on end we can extend above the 50 SMA, how many ATRs we can extend above the 50-day. And this was super extended, which led to a major rollover. And the preliminary signs were throughout this action happening up here and these weekly candles that were pulling us down and looking like they wanted to pull into the gap. And then obviously as we led into the gap, this was all signs that were happening under the hood throughout the beginning of December, which was leading into that January or December OPEX on December 20th. Also into FOMC right before that. And we had this showing off only into December 18th, right? So some of those sectors that are less liquid can give you a little bit of a hint on where the market's going to go from a broader perspective there. So yeah, we'll see what those do as we get into FOMC. We'll see what TOL and the home builders can do. Now we're going to go into Intel. So I talked about dispersion within NVIDIA, and I don't need to talk about all the dynamics around how this happens, but essentially we have a liquid leader in NVIDIA, right? And that's a lot of liquidity and leverage that has been built up for years, almost 3 years now, I believe, ever since the lows here where this was a major leader. 2022 was technically where all of it started, actually into 2023. So about 2 years here. And what we had was a little bit of a sketchy look here now on the weekly chart, right? If this one wants to start failing beneath 140.76 on weekly candles and we start putting in really disgusting weekly candles starting next week by Friday's end, I think that this is going to be a continued distribution, which would lead me to believe that some of these other tech names obviously start to distribute as well. I think Google is one of those ones where if we can't start getting above this daily resistance here, we're going to pull back into some of these gaps. I want to see if one of these highs couldn't honestly fail leading into FOMC, and that would be a really nice UTAD look on a daily chart, and then we'd look for lower highs leading into like probably February. That setup's going to need a little bit of time, but that's one of those distribution schematics that I have potentially. Amazon still looks fantastic. Nvidia looks terrible. Microsoft's in the middle of nowhere, and I think some of these need some of the reports to pass by. And reports are going to be big as well. So I'm not going to hold a lot of focus in the tech sector this week. It's more or less going to be a little bit of consumers. We'll go over into MO now. MO is one of those names where I think we can find another weekly higher low. Basically, what we're doing here is we had a big time pop. They sold off the pop above this high. There were two highs and a big resistance here at $58 to $57. And then we had major imbalances in the chart left from the downside. We had a big time gap and a huge continuation, and that led into a shallow week or daily flag here on the chart, which we pulled beneath that, and we had a big imbalance here on our hourly. If we look at bar by bar imbalances, we had a major imbalance candle here with a ton of volume behind it. Now basically what we're doing is we're covering that, we're filling the gap, and now we're just building out a multi-day base on that gap, and we're finally getting a little bit of a buyer appearing on that. So I think that this could definitely be a decent trade all the way back up into like 53.50. We have our earnings report in the way at the end of January, so that's a little bit unfortunate, but that's a really nice trade there. I might try and take a swing leading into the report just because the implied move on that report's not going to be big. It's a consumer name, so I don't think there's going to be anything that's like too much in the way in terms of like premium being a little too inflated. Um, so yeah, we'll go into MU now. So same thing as INTC with the dispersion from NVIDIA into some of these other semiconductor names. We have a lot of the reports on the way, so it's hard to really talk about these until we get the reports out of the way, and maybe we could play a peg off of a lot of these trades. But this is one of those names where we have a major beatdown that led us into new lows, right? And those new lows, 52-week lows, that is, not all-time lows. But we got a lower high on the weekly, and then we just pulled back, and now we're pulling back into where our previous preliminary accumulation range was at, which was after the markdown. Essentially, this whole entire range, right? And we're starting to find really nice big news off of those areas, right? With a lot of volume behind them, and now testing into what looks to be that gap low, right? So we have a little tiny gap that extends from here to here. I'll remove this, and then I'll pull this out, mark it out, and that's what we're leading. We're pulling down into that gap, and we're leading into the report. If we could get a peg here, I know exactly what's going on. Are we going to get that peg? I don't necessarily know, but if we do pull down and then we get a major pop, right, and then we get some high tight consolidation off of this previous resistance, that could be a fantastic trade for the upside later on. LRCX, there's another semiconductor name that's in a very critical area as we look on our weekly chart from our previous breakout level that was established here from January of 2022 all the way over here into September of 2023, which is a 610-day resistance that was obviously yet to be broken. We broke that. We got redistribution after we continued all the way up into 110, 111, and then we are pulling back now, and we're getting that accumulation look on these lower lows that are obviously failing to lose that level, right? So these are all lower lows where buyers are obviously stepping in. I feel like the accumulation was actually started pre-split as we started to get these two lows that were being made into really nice pops. We left behind bear gaps to the upside that remain unfilled. And then into the split is whenever they unloaded it again, but then all they did was really accumulate another low and then a fourth low. Now we're getting higher lows, right? We have a big time internal structure level to obviously remain controlled off of. And then we have a report this week as well with this one, which is Wednesday. That's also FOMC. So it's going to be really weird with a lot of these names, but once we find that candle, once we find that report, that's whenever we're going to really know how these names can behave for the future. I think this one's ready to go. I do. I don't necessarily know how ready it is just yet, and like I said, it's to be determined. I have commons here on LRCX. I have commons with INTC. I have commons with MU. So I have commons on all of the dispersion that can obviously take effect as we distribute with NVIDIA, and then obviously a lot of that money can rotate into some of these other semiconductor names. We'll talk about AMD here real quick. These aren't really on my watch list, I should say. They're more and less just, in my opinion, in the ending phases of a distribution. We have a big time area on AMD where we have a report into February, and we also have FOMC right before that at the end of January, which is this week, right? So is it going to reveal that this is a major change of hands happening if we could get like weekly prints essentially that extend above where this weekly level was at? We tried to put in that new low and that trap candle off of this weekly level, which obviously led to a redistribution up in the 170s. And then now we're pulling beneath into a new low that was beneath the August 5th low. And now we're kind of just playing around with that level, and we have a big time level to get back above, which is above 130. We need to see what happens here, because if the distribution doesn't carry out in the overall market, a lot of these names are going to be really nice accumulations that are give us really explosive pops back to the upside for the time being until we actually distribute in the market. There will be a distribution this year in the QQQ in the SPY. Is it going to be later on where, you know, we do inject liquidity into the market and we keep the market relatively propped through this FOMC, or are they going to rip the band-aid off now and recorrect everything? We don't know, right? But we do have a unfilled gap on AMD, and that could be a really nice trade opportunity above 130.79, or basically just above, like, if we could start digesting properly on smaller time frames after we fill these gaps that are left behind right here, and then eventually start turning those into like higher lows on top of those gaps, maybe try to push up into 130.79. 79, get a resistance, and then put in another higher low, and then eventually get above. I think that this one would obviously move like butter all the way back up into the 150s. So we don't necessarily know yet, but those are some of my accumulation watches. We have Nike. That I'm looking for a wedge pop on Nike. We have a big time. We have a big time level here on this trend line, as well as where sellers were essentially failing to displace beneath where it's only a 1-day low of support, right? This is only a 1 candle support, so it's not anything too relevant. But what's more important about this one is that we had our preliminary signs of accumulation building ever since the crazy markdown, right? Jeez. And what we got was a big time sweep followed by really nice continuation. Now we're resting up against that trend line with a inside bar formulated on Friday, right? If you guys go to the weekly chart, it's not the prettiest weekly candle, but it's not the ugliest. And I think that this chart is also very dependent on FOMC. However, this will be one of those outperformers. You have other outperformers in some of the other names. I don't think tech's going to really outperform unless you start seeing these crazy bids at the highs where things are just moving with clearly a lot of sellers being absorbed as well. And I don't think sellers are necessarily going to get fully absorbed. I think what they're going to do is, if this does pop, I think it's going to pop, and then you're going to see a lot of consolidation and volatility contraction up until our finally, whenever we get our next window of distribution potential. And then it's just going to eventually find one huge candle, maybe if we get another extension all the way up into the 160s, and then it would eventually start failing this level, and we might get like a few more ATR extensions above the 50-day before we obviously pull down and start putting in a UTAD that starts failing where the preliminary distribution was taking place from, which is this level right here, if this wants to be a weekly schematic. Could this be a weekly schematic? Yes, it could. But at the same time, there is nothing but that's telling me that they haven't been starting a distribution here on NVIDIA. So It's all up to FOMC. We'll go into IWM now because we're just going to scan the overall market. With IWM, we're still sitting within the imbalance candle from the FOMC, December 18th imbalance candle. We obviously had a big time gap here, which was probably some sort of data that came out. And then what we had was we also had a breakout level here. If you guys go to the weekly chart, this kind of looks like we could get a lower high somewhere within this range. You could pull your Gom box and start looking at swing high and swing lows equilibrium. We're basically right at equilibrium as well, right into the report. The fact that things are running up into FOMC, right into equilibrium, is very important. And if those are defended, that's a very, very important lower high, right? And then obviously that would continue likely a little bit lower. We don't know yet. All up to FOMC. I'll keep saying it. Meta, super strong daily chart here. This one just cannot be stopped. It's a very, very strong name. We'll go over into Netflix here real quick. Same thing that I talked about with banks, and the concept behind the banks is the same way I'll kind of talk about here with Netflix. If this thing wants to run up and then we get major extensions to the upside and no pull into that peg, right? More of just an inside bar above the peg, above the earnings candle low, and then we just get a continuous grind up higher into a really disgusting candle. This is going to be a really nice reversion trade to pull back into that gap, which is sub 950, or just into a retest of this, right? Just that general area from like 950 to 941 could be a really nice opportunity for a short side trade if we could start popping up into the $1,000 range and likely above that, and then we start failing. Maybe sellers get a little aggressive beneath the earnings candle high. Once we start getting beneath, and then that would lead us for a recorrection back lower. So that would be a distribution schematic in which I'm looking to trade here. The distribution actually started throughout most of this range. And then obviously that led to a recorrection higher. However, these are new highs now, ever so slightly above the old highs. So if we can get, like I said, just those simple extensions, we're only 5% above. If we could get another extension of maybe 5%, that would be 10% above this breakout level with no retest of it. That would be a really nice reversion trade back to the downside. If we could get a footprint candle from the top of the trend here that results in another sign of sellers obviously taking profits from this move higher, and then obviously recollecting what they've took profits on as we pull into the gap. I think that would be a really nice trade. So that's Netflix. I would obviously want to buy time there because it moves on an intraday. Day by day, the volatility day by day is not really that great, and you don't really want to be stuck in a shorter expiration on a name that tends to trade not so great, right? You definitely want to buy a little bit of time there. Contracts are expensive, so it doesn't have to be a trade for you, but that would be a trade that I'd be eyeing up. Now we'll go over into some of the long side tech trades that I have if the market doesn't want to pull back. First, we'll take a look at some of the pegs. I know Snow is in a peg. I mean, I think this chart looks really good. I still would rather be more in the discretionary sector or with Disney and whatnot. With Snow, it's kind of a similar concept actually to Lulu a little bit, but we never actually tested into this gap on Snow. So we have a big gap for the upside here on Snow. And we have a big bull peg beneath us where we undercut the earnings candle low, we reclaim back above, and now we're just getting this slow grind higher. If the market doesn't want to pull back, I could see myself trying to scoop up a dip on this one for further dated call entry here on a retracement back up into 194.20. Its little brother, I should say, D-Dog, similar sector here with D-Dog. We filled the gap. Now we're just consolidating off of the gap. We have really nice volume patterns on our weekly with heavier volume on the breakout, lowering volume as we pull back into a retest of this level. We have an inside bar technically here on the weekly chart. Doesn't really mean anything just because of the fact that we have a very important time in the market here. But if we were to be able to get above like 144-ish, this could be a really insane trade for the upside. Essentially, what we need is just a kicker candle off of the EMAs that show its hand. And then obviously, like if we could trade around that 144 level and establish that as risk, could be a really nice swing trade there. And this is a decent ATR name. I mean, commons here could also be a decent opportunity if this thing wants to go revisit towards those highs. That could be potentially about a 10% gain on commons. And if it wants to reach a new high, I mean, that would be a 20% gain. So, yeah, with that being said, that's D-Dog. It's just in a really nice area on the chart. I'm basically just picking apart really nice areas on the charts that are left behind on unfilled gaps, major breakout level retests where the reaccumulations can get very explosive from those retests with obviously shorts mitigating that were previously short into the report or short maybe on a resistance, and then obviously that turns from a resistance into a support where shorts will cover off of it or buyers will protect what they've previously sold from, essentially, where they rebid lower, they sold higher, rebid lower, and they were selling here previously. So if you're selling here previously, you really wouldn't want to sell here again if you previously sold up here. It's very simple supply and demand dynamics. That's why SR flips work. So LRCX, D-Dog, some of them have reports, some of them don't. The ones that don't have reports, I will be waiting for an entry on a flush trade opportunity. If we could get a flush trade, that would be fantastic for an entry. If we can't, we have a lot of different names that could bring us flushes. If we go take a look at the earnings candle, you just look up earnings whispers on the Twitter page, earnings whispers. We have Boeing earnings before open on Tuesday. That could be a decent flush trade. We have GM. GM was another really nice one. Yeah, we have GM coming off of a big time retest, and this was a huge accumulation. The spring being down here, we never actually even got a test just because it was really explosive. And then we got a breakthrough and a reclaim, right? And then we got a little trap candle. That's our LPS. We got our SOS right here, and then we got the continuation higher. Now we're just looking for that secondary stage of above where we previously broke the creek from, and another higher low. But we have a report. So a lot of these names are dependent on the reports. Those earnings are before open on Tuesday as well. We also have Lockheed Martin, which is at a very important level. So these are all reports that I'm going to be looking at before open on Tuesday. This monthly chart is on a really, really, really important area. Super important. So if we could pop ever so slightly above that range or just remain relatively propped into this range and maybe not get a move, these premiums are expensive in general, let alone with a report priced into them. I'll see how hard they get crushed, and I don't put a lot of size at in like weeklies or nothing like that on a flush trade. But sometimes I'll size for 0, go a lot lighter size, but these trades have the potential of running 4, 5, 6, 700%. So those are the 3 reports before open on Tuesday. We also do have RTX as well. That one doesn't have as much clean context in terms of like a flush trade. But then we have, after close on Tuesday, we have Starbucks. Not really interested in that one. ASML is before Wednesday's open. We'll go take a look at ASML here real quick. The chart looks awful. Don't really care about that one. Now we'll go take a look at T-Mobile. I don't really care about T-Mobile at all. Doesn't really trade too well. TMUS. Yeah, I don't really care too much about that one. Tesla after close on Wednesday. That one is huge. If we don't meet the implied move for Tesla, really insane flush trade opportunity here, guys. Um, they have been cooking premium here. I've seen so much flow entering Tesla throughout all of this consolidation. A lot of the flow accounts talking about Tesla. You know, that all of that flow is cooked. People don't really want to admit it. Um, but yeah, that's why we don't watch flow because the chart's way more important than flow, and it's at a very important area on our weekly chart off of these previous all-time highs that need to digest properly. And if we don't get any move from the report, we're in a huge area that can bring in a very explosive move on Tesla, whether it wants to be a UTAT up here or whether it wants to be a continuation, right, on just a simple break, base, and retest of a weekly level. So that report is huge as well. It's kind of like LMT, um, and it's kind of like what's another one that's really really big? Boeing, almost in a way. So those are two that have my focus. UPS, I've been talking about the industrial rotations that have been happening. FDX actually just beat on its last report. I believe, no, it actually did, but then it sold off a little bit. Um, so with FDX, this chart is just terrible. Let's go see if UPS is decent. UPS is decent. Wow. Um, this could be a huge wedge pop on UPST that's catalyzed through the report. And as you guys can see on, not UPST, UPS. As you guys could see, it has that lower low accumulation look with the lower lows trying to obviously stick here on a huge retest, right? So if we could get a big time pop or just some sort of flush opportunity on UPS, it's going to be really spready, so I doubt I'll do it. Or if it wants to mark down just a little bit and then find a recovery on an intraday, that could be a really nice swing trade. There's so many charts on here that are super, super nice in terms of context. And then the report is essentially where everything is very, very, very important, right? Super important on a lot of these reports. We have a huge earnings gap right here. We actually are trying to defend that earnings gap on where we previously had a markup from. And now we're just at a huge weekly wedge area. I'm not a pattern trader, but the context as to where the retest is on this one is very big, as well as where we could see a major change of hands kind of shifting here if we could get a major, peg or just a flat report and then an intraday continuation that pops us up for a really nice weekly print. Um, but that's all to be determined. So UPS is a decent one. MasterCard, I already know that one isn't good. Um, Intel after close on Thursday, huge. We already went over that chart. Apple Thursday, of course, that's huge. Visa, I don't think this one's good either. No, it's not. ExxonMobil and Chevron on Friday. So this week is just a deciding week for me. It's not really going to be much trading. I'll talk about UPST for like a shorter term day trade here real quick, and then we'll wrap things up with that. But I'm probably going to hit a little bit more of a scan tomorrow as well. Just to review some of the things that I talked about today, I like to do like 2 scans more than just one. So we'll talk a little bit tomorrow. Maybe I'll dive a little bit more deeper into like probability of what's going to happen with the FOMC and what's likely to happen. Although that doesn't really matter what's likely to happen. Um, this chart's nice. This UPST chart, I think it's pretty nice. If you guys go to the weekly, all this really is to me is like proper digestion through this weekly imbalance, right? I mean, we had a huge body here on the weekly where this was remained unfilled. We filled that, right? And now we're finding a little bit of momentum back above that. If you guys go into the daily, however, we have like basically the earnings candle low and the earnings gap being reclaimed on Thursday. So, with that being said, that was also where a previous support was before the breakdown. We had an unfilled gap. I think this one, if it can hold properly above that level and maybe pull back a little bit more and then find momentum off of that and launch pad from like the 65 area, I think this could be a decent trade back to the upside leading into the FOMC. I wouldn't mind a gap down and then a recovery intraday for UPST, and I would like to play with a decent close here, but the peg can't be ignored, right? And then obviously the reclaim after the fill of the entirety of the peg down here also can't be ignored, right? So that's your earnings gap fill. And then basically what we're doing is we're popping back above, and then we're getting inside bars above where the earnings candle gap was, where the gap open was, and where this support was made at, which is 65 bucks. So we'll see what could go on here with this one. The EMAs are directly off of 65 as well. So I think this one could be decent. Decent short interest one behind this one as well. So if more shorts want to cover on this one, obviously being a proper mitigation into the fill of the gap, followed by maybe a squeezy action all the way back to the upside to then obviously reevaluate this one towards that resistance and towards the 80s or mid 70s. That could be decent. I don't know what the IV is on these, and I'm picky about IVs, so I see how those premiums are looking, but we also do have a report February 10th, so this one has a little bit of a less pivotal window this week, I should say, as far as like other names having reports, while this one does not have a report. I don't really like trading names that have a report on the same week. I just think that's stupid. And a lot of the charts that I do like have reports this week, so it's going to be a little bit boring, but it is what it is. What else did I have? I actually named some charts that I really like. We'll actually go into my little stock list that I like to talk about. China, I'm probably gonna host another scan tomorrow and just talk a little bit more about China. I really like China. I do. Uh, and for me to say that is a little rare because I don't talk a lot about China. But oh, CRM is the last one I'm going to talk about here in a moment. I want to check through the rest of this list and just see. Yeah, this one's not too nice. Is this equilibrium? Yeah. CRM is one I really like. Why? If you go to the weekly chart, it's a huge breakout level on the weekly, like really big, guys. This is absolutely enormous. And then we actually got a retest of the local high breakout last week. So what we're doing now, and the reason as to why I like this, is I didn't want to blindly buy the retest. I really did not, because this name it was showing no action whatsoever as we trickled down into that retest. And we actually took out the previous retest low, and then we held it. We got a seller trying to step in off of the bottom of the earnings gap. And then what we did was we put in a higher low, and then we started to gradually increase our way back to the upside to eventually claim the earnings gap low. If you want to pull up the EMAs, they're also sitting right above, right beneath price right now, as well as the earnings gap level being right beneath price. So if you look at the weekly chart, I think this one could be a decent trade on momentum back to the upside into FOMC again. If the market wants to move into FOMC, I'm going to be watching CRM around 331 to 330. And then eventually just like a dip into those EMAs. I don't really care about EMAs, as you guys know, but I like them as a gauge whenever market gets a little weird and things need to I need to really put into perspective of like higher time frame trends and where the strength is and where the weakness is and whatnot. And I think this one can remain strong throughout this week just because of the context to where we are in the daily and how that weekly print actually closed, right? So this one also has a report, but that's that's not for a while. So we could actually trade that one. In tech, we could trade Nvidia. We could trade probably Apple. I can't short Apple until we get more up into this bear gap and make a new high into the bear gap, and maybe I'll short it again. I would rather trade long on reversion from this support into that gap. If we get a gap down and they soak the low right into the new week, I'm trading this to the upside back to the gap. So that's a plan of mine. The rest of these, they don't really like, there's not any new opportunities that I'm looking at. This is more of a market gauge. This one is, I have a position here and I'm looking at this one a little bit more in depth as we lead into the new week. We have a report February 10th, so that's pretty good. INTC awaiting a report. Nike, high tide inside bar has my focus for the week. D-Dog has my focus for the week. Likely a lot of these are all after FOMC. I have commons on a lot of these names. I'm probably going to start trimming, and I already have been trimming a decent amount of these into FOMC. AVGO is one of those ones where pretty damn strong. And basically, I don't really want to chase the highs. However, that's just one of those names that will give us a little bit more of a gauge as well as we lead into FOMC with the semiconductors. And the rest of these are just pretty stale, guys. There's not really too much to talk about. Lulu, a little too extended for me on an entry right now, but I would like a retracement. J&J, talked about that one. Would like to get above the earnings gap high, which is right here off this black level, or just digest properly off of like this, where an SOS can obviously be at. Really big volume in a lot of the healthcare names. So is that also pricing in something maybe happening with the market, or just maybe a little healthcare rotation? Who knows? And FOMC could also be an absolute nothing burger. So we don't necessarily know. We don't. And maybe the reports of the things that dictate direction. Um, so yeah. Now we'll go over into coin. I don't actually know. I'm not even going to talk about coin. Um, when's Honeywell's? It's February. Is there any charts that you guys like? Oh, I'll add Docu as well. Thank you for bringing that up to me. I'm going to add that to the focus. So with Docu here, guys, it's a really nice peg. Just standout strength in comparison to the rest of the names, right? This one is absolutely insane with absolutely no volume anywhere besides the December OPEX volume. And this one is just getting a really nice support that failed, turn resistance, and now they're trying to break through that weaker looking resistance as we speak. Earnings candle high or low, I'm sorry, is right up here at 95. I think obviously that could be retested and maybe reclaimed for a really nice move back to the upside. This name is absolutely dead right now, and with pending events waiting in the market, I don't necessarily know if you should be trading a name that's already dead leading into the event. That's very, very, very critical for the market, because typically there's going to be a lot of volatility contraction leading into an event like this. So yeah, I really like this one though. Like I don't mind getting a late entry. I really don't, because the chart is just insane. So I don't know if there's any charts that you guys really like, but as of right now, everything for me is really dependent on. There's a few trades I could squeeze in throughout the week, but most of the charts are really dependent on FOMC and earnings. So there's not much more to that I could even speak on here. Like Bitcoin's even super choppy. Um, I need to see what some of these growth names are doing real quick, and then I'm going to jump off. Um, really choppy in the CRWD and PanW names as well. Um, I don't really know what's in store for these ones yet. Um, I'm going to end the stream here real quick, and then